Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host Ron LeGrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
Hello, everyone. Welcome to the mentorpodcast.com. I have with me Mr. Jason Hartman today. And I've asked him to tell me exactly what's going to happen to us in the future going forward. and if it doesn't work out the way he plans, then the way he says it's going to, then he owes me $10,000 for the bet that I made him. All right. Jason, you don't remember all that?
I'm going to try and forget all that.
All right. Okay. Well, Jason is kind of our in-house economist, even though he's not in-house. I think you're going to enjoy the presentation when he shows you things that nobody else will show you, and frankly, in any business, including real estate business. So Jason is down in Colombia today.
Yep.
So if we break up or if he freezes up, it'll be because of the Wi-Fi. Not his fault or not my fault. So Jason, so glad to have you. Just tell him a little bit about your background, and I do want you to answer that question.
Sure, absolutely, Ron. Ron, it's great to be with you. It's always great to be with such a legend, such an original real estate investor and educator. It's just great to be with you.
Jason,
always.
That's what I told my wife, but I don't get a positive response back about that.
Hey, listen, you know the rule. Your family will never respect you the way strangers do.
That's true. That's true. All right.
They know you too well. So Ron, my company is called Empowered Investor. We help investors buy turnkey properties nationwide. And we've been doing that for the last 21 years through a few different companies that I've owned. And one of the things we do is a lot of research. We're constantly researching the general economy, the real estate market, and then different specific markets around the country that we're recommending for our investors. And this year, I have to say, in my 21 years of doing this, this is the most difficult year ever to make a prediction on anything, because there are so many wild cards. We would be totally remiss if we didn't talk about the new Trump administration. Trump 2.0, I think is, and I'm gonna get a few haters here, but I think he's awesome. I think he's making very good decisions on the vast majority of things. I don't agree with everything he does, but most things I think he's doing pretty well. I think he's grown up a lot. He's matured. He's now a politician, and he understands things much better than he did in his first term. And he had 4 years off because of the rigged election. Maybe I shouldn't say that because we'll get censored. And he had 4 years to kind of map out his strategy and really do things much more effectively. So I like what he's doing. But as far as the real estate market, it is incredibly hard to predict. And here's why. Right now, the real estate market has really been, pretty frozen for at least a year and a half, maybe 2.5 years, depending on how you look at it. Since the rates went up so dramatically, it's just been a very weird real estate market. I can tell you that inventory of housing around the country is still very low. Now, just for a reference point, it depends, number one, what statistics one is looking at, because the National Association of Realtors, who has published inventory data for many, many years, the way they count the inventory, and I'll give you the numbers in a moment, but I just want to tee it up with this. The way they count the inventory is by including active listings, pending listings or pending sales, and contingent sales. I don't really like the way they do it. I like the way some of the newer companies are doing it, like Altos. And what they do is they count only the active listings, because those are the houses you can really buy today, And so as far as active listings, we've only got about 635,000 homes for sale in a country with 340 million people and about 140 million housing units. So less than 0.5% of the inventory is for sale right now. So inventory is extremely low. Now, that's largely due to what they call the lock-in effect that I'm sure you've talked about before. And that is all these people with incredibly cheap mortgages that they just don't want to give up. When someone has a 2.5, 3%, 3.5, 4%, 4.5% mortgage, it's so much cheaper than the new mortgage they could get today that they look at that mortgage as an asset. And so they don't want to give up that mortgage. And that's why inventory is very low. But at the same time, demand is also very low. The Federal Reserve, with their interest rate hikes, has destroyed demand. So that's how we arrived at this kind of frozen market, right? Where there are some buyers buying, but not as many as there should be. In terms of sales volume, it would be nice to see sales volume around 6 million units per year, but we're only at about 4 million units per year. So that's why all the realtors, the mortgage people, the title people, they're all crying and singing the blues and complaining about how terrible business is.
Reminds me of post 2008, post September.
Yeah.
Same thing was happening. I see it, I hear it. Market is slowing down everywhere. It's not dumping down, but it's not slowing down. And so that's really one of the big questions is what's going to happen to the real estate market? Because great, they are not going down yet, but now Trump is laying off hundreds of thousands of people around the country. That has got to the real estate market and put more sellers in a problem that us investors have to help them solve. And by the way, what you just said, the low interest mortgages, I could make a case that your whole business could be built around hunting down these low interest mortgages and taking them over subject to a wraparound mortgage because they're going to have a low payment as well. I'm getting a lot of people. Just in the last couple of weeks, Jason, I've had several people come to us that beg us to take their house, beg us to take it. Of course, they don't want anything. They just want to not quit making those payments. Problem is, the payments that they're making put the rental market out of whack on them. I've had to turn down 2 or 3 of them because there's just no reason to buy them.
Yeah.
So, and I don't know when the rates are going to come back. In fact, I don't know if they're ever going to come back. They probably will. But on that note, I can tell you, I started in 1982, and if you were back then, you wouldn't worry about the rates today. I swear I remember sitting in a cafe one time with a friend of mine, and I made a statement. I wonder if we're ever going to get down to 10% interest again. And that was in the early 80s. So people that have not been around this stuff, I mean, I've been since around 82, I've been through some multiple cycles. And then, by the way, the interest rates today are half of what they were in the early 80s. I was there, and it just wasn't feasible to take over these mortgages. But I don't want to get us off track here, but what you're saying is absolutely true so far.
Yeah.
So what do you think is going to happen? And by the way, your opinion is better than most, and it costs the same wherever it comes from, whichever talking head it comes from, guys. This is at least an educated talking head, not somebody repeating it.
Yeah, thank you. When I got into the business, interest rates were 14%. So I got in, not too long after you, and everybody was so glad because they were coming down from 18%. So it's all relative. But of course, the home prices are much higher nowadays. So everybody buys a house on a payment, not a price. Like nobody really cares what the price of the house is. They care what the monthly cost is, right?
Pretty much.
And so when you have these higher prices, if you're going to sustain higher prices, you got to have lower rates for more affordability. But it's a very strange market. So let me mention a couple of the things, Ron, that's making this market very, very hard to predict. And I will give my prediction, by the way, so we'll get to that. But just a couple of things. So, of course, we've got the wild card of the interest rates. Trump doesn't control the interest rates. Even the Federal Reserve and Jerome Powell don't control them directly. The Fed has totally screwed up. During the COVID era, they should have raised rates much more gradually and much sooner. But Jerome Powell kept repeating, long after it wasn't true, this kind of transitory inflation and supply chain problem that was causing the problem. And when that problem went away, he still kept thinking the same thing for maybe 8 more months. And he should have raised rates then, just gradually. And it would have been a nice soft landing. But, we have what we have. And
Yeah.
so the wild cards now, I mean, the tariffs, right? Everybody who's a real estate investor, I think, should look at the cost of housing determined by its component parts. I like to say that I don't even really like real estate that much. What I like investing in is commodities. And if you look at a house, it's really just a package of commodities or an assembly of commodities.
Yeah.
And so, you've got copper wire, you've got concrete, you've got lumber, you've got glass and steel and petroleum products and energy cost and labor cost and much more. So, a lot of these, especially the smaller parts of houses, are made in foreign countries, and a lot of them in China. And we obviously have a trade war going on, and if you slap a tariff on these countries, that's going to make the cost of housing go up dramatically, because just a lot of those component parts will get more expensive for builders. So that's a good thing if you own the properties, right? But if you're trying to buy a property, it's not so good, right? Because it makes the price go up. The other big wild card is the labor issue. Okay. And by the way, I want to say that I think we do need some tariffs. I actually agree with Trump on this.
Me too.
Because good. I'm glad you agree with it, because, like, just take it back to the Bible, right? There's this old biblical concept a lot of people are familiar with called equally yoked. And the trading partners, just like partners in a marriage, need to be equally yoked, right? They need to have the same circumstances to create a level playing field. And China doesn't have the regulations we have, so our manufacturers can't compete with them, right? It's just not fair. So I do agree with some degree of tariffs. I think it makes the playing field more level. And I think overall, it's going to be good for the country. But in the short term, it's not going to be without some pain to make the adjustment.
Going to hurt all those people losing their jobs.
Yeah.
I heard the IRS is laying off 6,000 today.
Well, that is wonderful.
Yeah. They need to lay them all off, don't they?
Yeah. I agree. And I love what Elon is doing and what Doge is doing. We're finally seeing all of this corruption and all of these people in our government that have just been on the take for decades. It's awful what they've done.
Yeah.
And,
hard to believe it's so big too.
It's just, look, when the government gets bigger, the corruption gets bigger. It grows evenly, right? We're always going to have corruption. But if we have a smaller government, we're going to have smaller amounts of corruption. If we have a bigger government, we're going to have bigger amounts of corruption. So
I remember back in the 80s, early 80s, so many lenders were hunting for deals. I mean, if you could fog up a mirror, they give you the money. And the whole industry started helping people fill out applications and lying to them when they go to the bank and get a debt. That became industry standard.
Right.
Really, it did. And then, of course, it started declining and it went back to normal. I don't know what normal is anymore.
Right.
But it's the same point. I don't think a lot of these politicians even knew what they were doing. They were just following orders. But the trouble is, now what's going to happen? I don't know how many houses are going into the market. I guess a smaller number. I don't know. It might be a larger number than we expect. But I do know that somewhere these houses have got to go. Somehow these mortgages have got to be paid. And now, especially when you have both husband and wife lose their job, boy, that puts a hardship on any family. So back to your point, I agree with what Trump is doing it as well, but maybe he needs to slow down and let it catch up a little bit.
Right.
Before he drives the country into an economic downfall.
Right. And you're right. Any change, any significant change needs to be done incrementally and slowly. Otherwise, it's just going to be too painful. The problem is, he only has 4 years and he wants to see the result before he leaves office, obviously, right? That's what everybody wants, is to have things good in their short term and leave a legacy, So we'll see what happens. But, the other big wild card is the deportations. Now, look, countries have borders, and countries have a right to have borders, and they should have borders, and they should control their border. I mean, every country on earth controls their border much better than we have been, right? It's just ridiculous. And so, if you deport, millions of people, a lot of these people work in construction. These immigrants, they're cheap labor to do construction, and even after the home's built construction, they're doing your landscaping, they're doing all of this stuff. So the cost of that labor is going to increase. All of these factors put upward pressure on prices. And going back, Ron, to our talk a moment ago about sales activity. A lot of people have been very confused when they're trying to understand the market the past few years. They talk about how sales are down, but there's a big difference between sales and prices. Okay, prices are still going up, and there's this kind of faulty human belief that a lot of us have that just because housing was more affordable, that it has to revert to that. That's just not true. Okay. I mean, housing is not as affordable as it was in the 50s or the 60s or the 70s or the 80s, it just never has to go back. Okay. The only way housing will get more affordable is to massively increase supply or massively reduce demand. And that means, maybe you give people a shot in the arm and they're going to die early, right? And that'll reduce demand. Or you just increase supply, which means building more homes. So a lot of people might be thinking, well, Jason, Trump has said he wants to allow builders to build on federal lands. That's not going to solve the problem, folks. Even if Trump gave that, and I say Trump, but the government in general, right? If they gave that land away at super cheap prices, it wouldn't solve the entry-level housing problem. And the reason is that the land component is a small part of entry-level housing, right? The land doesn't cost much at all for a little starter home. It's the cost of construction. It's the materials that cost.
Exactly. I can guarantee you that happened with me. It doesn't. You're right. It doesn't really matter what the land costs, because the dollars per square foot it costs to build that entry-level house. Now you're up there to just about what it's worth. So doing all that working for nothing, and you can't cheat the math. So the interest rates coming down might beef up the production and the sales, but where's that number at? How far they got to come down, and is it even true? Well, I don't know. So what
look,
do you think we're getting into in the near future?
I mean, prices are already going up, and they've been going up, even though we just experienced the most significant abrupt increase in interest rates in history. It never happened. Never happened that fast before, right? And even with that, housing is in such short supply that prices have still been going up every year, right? All along since those interest rate increases. So, I mean, look, if I had to make a prediction for this year, which is a tough year to make a prediction, let me tell you, if rates stay high like they are now, if they stay in the neighborhood they are now, I think we will see about 4% appreciation this year. But I just got to tell you that for the last 21 years that I've been making predictions, I've been really quite accurate, and I've got a great track record on predictions. And this year, that crystal ball is foggier than it's ever been in 21 years for me. I'm even going to say I could be wrong. Okay. I don't know.
No, don't say that, Jason. Crap.
No way you can be wrong. It's just too hard to tell. But I'll tell you something. If interest rates come down, prices are going to go way up. That appreciation will turn into 8, 9, 10%, because the housing supply is still very short. And Ron, during the Great Recession of 2008, we heard in the news media, a lot of people were using this phrase. They called it shadow inventory. And what that meant is all of these banks that were about to foreclose on properties or had already foreclosed on properties, but didn't release them onto the market. And the government wanted them to dole those properties out very slowly so that wouldn't crash the market even more than it did. And what we have now is the complete opposite. We have a problem with shadow demand. A lot of these young people are living at home with their parents, both the millennials and the Gen Zers, the younger people than millennials, are what's called the boomerang generation. They go off to college and they come back and live with the parents. Those people are eventually going to grow up and form households, and they're going to need a house. And there's just not enough supply.
Yeah. So you're telling me is you really don't have a prediction of what's going to happen in there.
I'm going with, if rates stay high, my prediction is 4% appreciation. If rates go down more than that, we're going to see more appreciation depending on how much rates go down.
I just heard yesterday that the Board of Realtors said that prices increased 5% last year.
Yep.
Which is way more than they did a couple of years prior to that.
Yeah.
As a real estate owner, I'm sure glad we had that appreciation. But
yeah, and let me tell you, if prices only, right, we're so spoiled thinking that appreciation is going to skyrocket. If prices only appreciate by 4 or 5%, if you put 20% down on that property, you've got a multiplier through that leverage that makes that return on investment 16, 20%. So that's phenomenal. I mean, 4% appreciation, everybody should be clapping and super happy about that, because that's still very solid appreciation.
Yeah.
It's not 26%, okay, like we used to have.
That's about where it should be.
Yeah,
somewhere
right.
4, 5, 6%.
Yeah, normal.
Right. What have I not asked you that I should have?
I think maybe just digging into this labor shortage issue is important. In my newsletter, and by the way, anybody can subscribe to my free newsletter. Just go to jasonhartman.com, fill out any web form, and you'll be on the list. Again. jasonhartman.com, just my name, jasonhartman.com.
All right.
And we just published a few articles about the labor shortage with construction. This it has been an ongoing huge problem for several years now. And on my podcast and YouTube channel, I interviewed the head of the National Association of Home Builders. And, he talked about it, and he enlightened me to something that just blew my mind, Ron. The average construction worker now is almost 50 years old.
Really?
And this is like an aging population. I mean, look at your millennial kids and grandkids that are Gen Zers or whatever. They're not going into construction. Nobody gets a job in construction anymore, right? And that labor shortage is going to make the wages skyrocket. And that is an input to the cost of housing. It's going to make the cost go way up.
Well,
and then you deport a couple million people that are illegals and they're working construction, and it gets dramatically worse.
Well, I don't really think he's going to deport all the folks, just the criminals. I don't know what he's going to do, but that's a tough choice on his part. But we definitely need that labor.
Yeah. He's deporting, certainly deporting some of them, whether it's 1 million or 14 million. I don't know, but some of them are definitely leaving, and that's going to leave a hole in the labor market for sure.
Yeah. All right. Well, we haven't quite solved all the world's problems yet here today, Jason. So anything else you want to, would you believe that we've already been on this thing for 35 minutes?
Wow. Oh yeah. That's amazing. That's
just
amazing.
Got started,
well, yeah. I guess I'll just wrap it up by saying, look, right now, to invest, you have to be a little more of a contrarian, no question about it. But there is no asset as good as income property. Rental housing is the most historically proven asset class in the entire world. It is the most tax-favored asset class in America. There is a huge shortage of it. We should have double the inventory we currently have to be only at normal, not to be in a bad market or a down market or a buyer's market. We need double the inventory. So the shortage is going to persist for a very long time.
He froze up. He'll be back. He is in Colombia,
disruptive thing really fast. Housing, it's not that way. It's a low tech item, right? It still takes simple ingredients, and that's not changing anytime soon.
Yeah. So what do you recommend in the way of changing the way people live right now? I always tell everybody, get out of personally guaranteed debt completely as fast as you can. you can get all the non-recourse debt you want, which is the only thing I'm going to do. But anything you can do to create income, especially income that keeps repeating itself, residual income, that's what houses do if you don't just quick flip them. But even you retailers out there, you got to keep in mind, we don't know what we're getting into, and that house could be worth a lot less when you get through with it than you think it is today. I see that happen in a lot of places as well. Be careful what you pay for these properties if you intend to buy them in rehab. Make sure there's a lot of room in there for the economy. And you don't personally guarantee any debt. And if you've ever been trained by me, you get your money from private lenders.
So I would just say to everybody, buy more real estate. It's going to change. Rents, there's definite upward pressure on rents. Rents are going up. Okay. Like, don't look at the little micro moves in the market. Look at the big picture. There's a massive housing shortage. There's massive demand, and prices have a lot of upward pressure, and so do rents. Exactly when you will see that pressure materialize, I don't know, but it's there and it's coming, and you're going to make some great investments. So don't wait to buy real estate and wait. And there's a lot more on my YouTube channel and my podcast as well.
Exactly right. By the way, if you're watching this, you don't know me yet, I'm at ronlegrand.com, and also all over YouTube. I must have 200 or 300 videos on YouTube. Not hard to find either one of us, actually. And I often tell everybody, Jason, number one, there's never been a year I couldn't buy houses. No matter what's going on outside, people always need a place to live. Even when the rates were 18%, still buying houses. It's cheaper houses, granted. And that's where the seller financing industry was born, and the realtors were dropping like flies. But it's all cyclical, all cyclical. I've been through about 6 of these downturns, 08 being the worst. But last year, we're trying to catch up with 08, I think. But I didn't have a very good year last year. But we're turning on the juice, and we're going to fix that real quick as well. So real estate, can't do no harm in real estate, even if you pay too much. If you don't personally guarantee debt, that's the biggest mistake you can make. If you pay too much, that'll catch up. Give it a little bit of time. And
all you have to do is wait a little while, let the market catch up with you. It's such a foolproof asset class. It's wonderful.
Yeah, and you don't care what the house is worth if you're not trying to sell it. That's the truth.
Right.
All right. Well, I appreciate your time, Jason. I'm going to let you go and enjoy Columbia. So why do you live in Columbia?
My pleasure. Oh, I don't live here. I'm just traveling. So I'm Ron, my next step, I'm going down to Chile, and I'm going to Easter Island. Island, the most remote place on earth.
Really?
Yeah.
All right. Give me a report on that one when I see you. All right.
I sure will. I'm going to show you some great pictures.
Great. Guys, if you have questions for Jason, you can forward them to us. You can forward them to ask@ronlegrand.com, and I'll transfer them to him, and we'll get your questions answered. Thanks for staying with us this time. I enjoyed talking to you. I learn a lot every time I do.
Thank you, Ron. Happy investing to everybody.
Thank you, sir. See you soon.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.